Hey everybody, it's me, Gregory Mannarino. How are you today? It is Tuesday, January 2nd, 2018, the first trading day of the year. I missed all of you. I hope you had a great holiday, but it's back to work time. Sorry to say that, so let's get right to it. All right. The story right now, and I got a lot of stuff I want to talk about, is the dollar. If you happen to have seen the video that I did last week, my last post-market wrap-up of 2017, I said this year is going to be the year of inflation. That was the theme for 2018. And the U.S. dollar, first of all, the dollar got cremated last year. This trend is going to continue through this year as well. We're going to see inflation, there's no doubt about it. And again, as I am doing this, the dollar is down again. This is like 2.5 weeks where the dollar has been doing nothing but go lower. Now, that's important to watch for a lot of reasons. I mean, you know, the dollar gets weaker, you get poorer, you lose purchasing power. It's that simple. You got to diversify out of the dollar, period. That has a lot to do with the rise of cryptocurrencies that we've been seeing lately, and I've covered that as well. You also understand you need to hold gold, you need to hold silver, bet against the debt, become your own central bank. My two themes since day one's not ever going to change. World central banks are going to continue to inflate, as I've been talking about. They've never stopped. They're going to continue to buy debt. They have no alternative, and they're going to kill their respective currencies. So that's it. It's very straightforward. Now, as I am doing this video blog, the stock market is higher by nearly triple digits. The Dow Jones Industrial Average. Again, the weaker dollar is stock market positive. It takes more weaker dollars to buy shares of stock. You understand? Very simple. The bond market right now is selling off. We'll see if today's rally continues with the bond market under pressure like this now. You also need to be looking at the junk bonds, ticker JNK. Okay, I've covered this a lot as well. And you could watch this, again, right on my website. There's a free stock analyzer there. Go use it. It's free. Everything on my website's free. You know that. Right side of the page, all the way down the bottom, free stock analyzer. Put in ticker JNK. You can see, that's the junk bond. You can see what's going on here. Not too much buying. Now, what does that mean? That means, let me put a perspective on that. When junk bonds are being bought up, that means the market wants to take on risk. You understand? Right now, the junk bonds aren't doing too much of anything. They're about at the flat line, despite the fact that the Dow Jones Industrial Average is up nearly triple digits. But credit-worthy debt, you know how I hate credit-worthy debt, is selling off right now. So we're getting a little bit of a tell from the junk bond market that this rally here probably won't continue for a day or two. I think the market's going higher. You know that. And I spoke about it in the video that I did on Friday. I'll talk about that a little bit more here. But be a little cautious if you want to enter a trade right here. Because, again, the junk bonds are not telling us anything. Regular credit-worthy debt is selling off. They're going to prop it up. They always do. And again, at one point, it's not going to work anymore. But I still believe, again, because the stock market is being used as a political tool. How many of you heard President Trump over the past several days talk about, oh, I believe the stock market is going higher. Oh, I believe this. This is, he's telling you. It's a gift. He's going to make sure the stock market goes higher. Again, under President Obama, President Trump, who is then candidate Trump, said the markets were not real. The Federal Reserve is supporting the markets to promote Obama, but under him it's real. You understand? He's talking out of both sides of his mouth. This is what he has to do, sadly, to keep people marching in line, the sheep. You understand? Very sad. But you and me are going to capitalize on that. Just real quick before I go further, KMI, Kinder Morgan, okay? I did a lot of research into this company over the weekend. I happen to like it. I think it's in the right spot right now. Now, this is not a trade. Understand? This is something you want to buy, and you just want to hold on to it for like, years. So I happened to buy this morning. It's not a trade. It's something I'm going to hold for a long period of time. It has a nice dividend. And as far as I'm concerned, this market is going to go higher until it doesn't. President Trump is going to make sure that happens. The Federal Reserve is going to continue to prop up this market, buying up bonds. Quantitative easing has never stopped. It never will stop. And by the time the Federal Reserve, pay attention to this, because there's a lot of people who are deluded. By the time the Federal Reserve normalizes their abnormal balance sheet, we'll all be dead. That's seriously the pace at which the Federal Reserve is going to, and I mean dead from old age. I don't mean dead from, like, God forbid, anything else here. It's just not going to happen in our lifetime. Forget about it. I'm 52. Maybe by the time, if I were to live to 202, maybe the Federal Reserve would normalize their balance sheet. It's not going to happen. So forget about it. This is all going to continue to be propped up. Debt is going to continue to explode. Deficits are going to continue to explode. There is no way possible to grow out of this. No possible way. I don't care what President Trump is trying to tell you. Economic growth is not going to pick up so magnificently that we're going to grow out of it. Can't grow out of this. It cannot happen. Understand? So all this is going to be is propped up and propped up and propped up and propped up even some more, inflating the debt bubble to even larger heights than it is already. It's unreal. It literally is unreal. But again, that does not mean we can't capitalize on this. So again, Kinder Morgan, I think this company is massively undervalued at this point. Why is Greg doing this? Let's talk about a few things. Generally, I do not hold positions like this. I trade these markets. I get in and out of them. However, I had a phenomenal year trading last year. I got cash I have to put to work. You understand? So, and look, I'm no rocket scientist. Anyone can make money in this market. It's going in one direction that is higher. You do not need to be a brain surgeon to pull something like this off. You just got to understand where it's going to go, and that's it. So I decided to take some of that cash that I have, put it to work in this company. I'm going to probably add some other ones as well. Again, I happen to like this one here. It does pay a nice dividend as well. Just figured I would get this out so you can understand. So again, this is not a trade. I'm not saying you can't trade this. You can absolutely trade it, but I did not buy this as a trade. I bought this as a position I'm planning on holding from now until who the freak knows. We'll worry about it at that point. If, in fact, I think the market's going to pull back and KMI here is going to drop, I'll buy a protected put against it. You understand? There are so many ways to play this game. This is a game, people. It's like playing chess. You understand? And quite frankly, if you have to be in this, there's no doubt about it. You can rip its face off. It's not that hard, especially in this environment where the market's going to continue higher. Dollar is going to continue falling. That is stock market positive. The Federal Reserve is going to continue to support this market. That is stock market positive. So what does that tell you? You understand? Higher. What does it also? You also need to be in metals. Why? Inflation. Like I said on Friday, inflation is the word. The dollar is going to continue going lower. There's nothing supporting the dollar here. Zero. You understand? The Federal Reserve wants to kill the dollar. They at least want to keep the price suppressed for a myriad of reasons, including reasons that have to do with trade, international trade. So you can expect the dollar to suffer. That means you are going to lose purchasing power. So you need to find a way to get it back by acquiring more of these weaker dollars one way or the other, betting against the debt, becoming your own central bank. I mean, it's unbelievable. So I know this video is getting kind of long, but it's important. A lot of stuff I covered here. I have not yet entered a trade today. If I do enter a trade today, I will post it on all of my social networks. Again, at least follow me on Twitter if you want to follow along with my trades. And quite frankly, if you've been following along with me the last bunch of months, I am proud to say that you are much richer today than you were then. I promise to keep that going. It's not going to stop. You are not going to fail on my watch. Just not going to happen in any way, shape, or freaking form. So I think I laid out what you need to do right now with regard to this market and how you need to play it long term as well. I got your back. And I know you have mine as well. And all right, let's see what happens at the end of the day. We're going to sum this up with my post-market wrap-up. Watch the bond market. Again, just have a look at this, and you really honestly will not believe what you see. Go to my website, traderschoice.net, link in the description of this video. Right under the chat room is the bond market chart. You're going to see a massive red line. That is a huge sell-off going on. Watch for that to turn around. If that does not turn around, what could you expect to see happen? Stocks will fall. It's that simple. They have got to prop it up. And we've been seeing this happen without fail, over and over and over again for months and months. And I've outlined this for you, I think, better than anybody else has, because I have a chart that you can look at live. Go have a look at it and take advantage of that stock analyzer. I set it up for you with really important indicators. And that's also on my website, right side of the page at the bottom. And check out KMI if you're interested in getting along something. And I mean not as a trade, I mean to hold. I think it's massively undervalued, and we're going to see how this plays out throughout the year. And again, it pays a nice dividend, so there's some income for you. You see, what is a dividend? Most people don't even understand what that is. It's basically you're being paid by the company to hold their stock. And no matter what it does, it can go up, you get paid a dividend. It goes down, you get paid that dividend. So it's like a source of income, you understand? So that's it. Long video. I'll see you at the end of the day. Check out that bond market. Watch that bond market. And I'm glad to be back. Glad to see you. I'll be back at market close. Over now.